So let's get going. All right. So today we're going to talk about a topic that I think is very important. And that topic is there's a four-letter F word that is being used by a lot of accounting firms. And I'm seeing this more and more. And it's one of those things that I really wanted to really understand like, hey, does this four-letter word, does it make a difference? Does it really add value to the accounting firm? Does it really add value to what they're doing? Because it's a common trend that I'm seeing a lot of people pick up on. And so we spend months doing research, talking to business owners, really getting their feedback and really understanding, does this F word really make a difference? And there have been some interesting feedback that we've seen. And I'm definitely excited to talk about it and to share some of the insights that we've seen. And just to give you a little bit of context, my background is accounting and finance. I'm a CPA by trade. I run a firm that is specializing in bookkeeping and CFO services. So from a standpoint, like we do bookkeeping, meaning like we're really helping clients organize, get their back end bookkeeping stuff straight. And then we also do CFO services because my background has been a little bit more on the corporate finance side, meaning I've worked for companies like, 4,500 companies like Navistar, General Electric. I've worked for tech company that was private equity owned. So I know that world, no M&A activity. I've worked in investor relations. So I've definitely had to interact a lot with Wall Street analysts and really helping the CEO and CFO of $14 billion company get ready for their quarterly analyst calls, get ready for the special analyst visits. So it's something that I will say is CFO services are where I spent a lot more of my time on. And that is something that, our firm does a combination of both, because what we realize is that CFO services are not great if you don't have a decent underlying set of financial statements, or if you don't have good financial data. And so we started offering both because it allows us to give a unique package of taking the data that people have in their bookkeeping records and to also offer it in a way that makes sense, that gives them insight. And before we jumped off into really just diving into, hey, we're going to start a business, we're just going to start offering service to everybody, is we spent a lot of time, really researching and understanding the market. Because before I left my full-time job as a director of finance for a tech company, one of the things that I did is I went on LinkedIn and I reached out to all of the CPAs in my area that were full-time in their CPA firm. So I just went on LinkedIn. Some people, I found their website, sent them an email, and used my network to really get in contact with some people. And I reached out to them and I was like, yeah, here's my message to them was, hey, I wanted to talk to someone who is full-time in their firm because I'm considering leaving my full-time firm leaving my full-time career to start my own firm. Of course, not everybody responded. Some people responded and some people came back and said, yeah, I'd love to talk to you. Some people just didn't respond at all. I'm guessing some people didn't get the email. I mean, to some of these people, I was a stranger. So I completely get it. No hard feelings, no love lost. But some of the ones that did respond, and we actually sat down and we had a conversation. I remember one, I went to lunch with them and we sat down, we talked about their business. We talked about what their experience was like. We talked about the way they approached it, the things that they were doing. And one of the things that really stood out to me is that this person was having a challenge with getting clients. They were having a challenge with, the long story short, they were having a challenge with their sales and marketing process. And so I went and I talked to other fractional CFOs. I talked to other CPAs, and in having that conversation with them, what I realized is that a lot of them had the same issue, where they had an issue with getting clients and that sales and that marketing front end client acquisition, I guess you can put it that way. And one of the things that I would ask them about is kind of like, what does your client acquisition process look like? Or how are you going about solving that problem? Because it was very important for me to know what the problems were, because if I'm going to focus on leaving my corporate job and starting a firm, being in my firm full time, I need to know, what am I getting myself into? Like, what challenges, what problems do I need to be prepared to face? And so in asking them about it, not only, and I would say not only just being aware of what the problems were, but also having an idea of, how am I going to solve these problems? Because it's one of those things where you just have the perspective of, hey, I know what the problems are, but it's something completely different when you're like, hey, I know what the problems are and I have some potential solutions. And so that is the approach that I wanted to take to it, is to walk into the situation saying, I know what the problem is, but I also have some solutions, and here are things that I'm going to do. And in having those conversations, one of the very obvious things that I came across when talking to a lot of them is, they said, one of the things they were doing is they were networking. They were going to networking events, meeting people. And that was great because I was having the conversation with them like in December of 2019, January of 2020. That made sense then. But when we were going into when the pandemic hit and we went in the shutdown, like, you couldn't get out and you couldn't go to networking events. They weren't the same. There wasn't stuff like that. So some of them, what they talked about is they just leveraged their network of people that they knew. I moved to a new city, so I didn't know a ton of people. And so I had to be creative about it. And so one of the things that I learned is there was a way that the fractional CFOs, there was a way the CPAs thought about how to really solve the client acquisition problem. And then my next step was, all right, I'm going to have to be creative about this. So what I did is I started a podcast called the Business Talk Library. And the Business Talk Library was a company I started making media content. And what I decided to do is, I'm just going to actually have on a bunch of entrepreneurs and business owners, people who are prospective clients, and I'll just have a conversation with them and start to understand from them, what is the perception that they have of accounting and finance, like hiring, accounting and finance help. And in a matter of 18 months, we did about, I think just yesterday, I guess it's a little bit more than 18 months now, but as of yesterday, I think I filmed like episode 478 or 478. So talked to a lot of business owners and really started to understand, all right, this is how CPAs and fractional CFOs view their firm. And this is how they view solving the problem. And then I wanted to understand from the business owner perspective, what are their views on, hey, some of these strategies that CPAs and CFOs had, or fractional CFOs had told me. And what I realized is there was a very, very big difference between what the business owners, who are the potential clients, what they suggested, as opposed to what the CPAs and the fractional CFO firms suggested. And then it became obvious to me, I see why so many CPA firms are having a problem with client acquisition. It's because their focus is not on the thing that really will generate the connection that they need to bring on more clients. So one of the things that I saw that was very common for a lot of CPA firms, as well as fractional CFO firms, is that they tend to use this word that really does not sit well. It's this F word that they use that really does not sit well with business owners. And the more I talk to CPAs and fractional CFOs, the more I realize like they were under this misguided notion that using this 4-letter F word is actually helping them grow their business. And what I realize is that is so not the case. So for the next, I guess, for the rest of this episode, I'm really going to dive into what that 4-letter word was. And then also, when that 4-letter word is said, what the actual business owner or potential client thinks about that word versus what an accountant thinks about that word. Now, the four-letter word is full, Full. And the way that I was seeing this show up a lot is people were saying, we are a full service bookkeeping firm, or we are a full service accounting firm. We're a full service, fractional CFO firm. We offer, and it was different things that are, I guess, the way people described it. But the gist of what I saw commonly was, you offer tax, bookkeeping, you offer, analytics, and you also offer audit reviews. And some were saying that they also offer CFO services or fractional CFO services. And for a lot of accountants and CPA firms and fractional CFOs, like, that was their way to solve the client acquisition process. Is, if I offer everything, then I can grow my business because I can bring on clients, I can do more. And they saw that as the opportunity to really excel and grow their business. And one of the things that I learned in talking to a lot of business owners is that's not necessarily how the business owner sees it. And because people didn't have the same mindset that the business owner had, there was a lot of issues. I mean, a ton of issues. And so here's just a quick list. Let me just show you. Here's a quick list of some of the issues that came up. And like I said, I'm going to go one by one of the biggest ones. I'm going to pull out the biggest issues, and I'm going to talk about those a little bit more. But some of the issues, like I said, when the word full service is in a firm's marketing, or when a firm owner or partner is talking to potential clients and they mention the word "we are full service," a lot of times this is what the business owner hears. The business owner hears, you offer a lot, but you can't really help me. Like, you can help a lot of people, but you really can't help me. The other thing that they thought is, your services must be cheap. The other thing is, you're actually a little reckless in your business and the way you're approaching your business, or you're greedy and you give low quality. The other things that they thought of, like, you don't have space to fit me in. Like, you don't have room to actually take me on as a client, or you don't have room to grow and expand. And when I started hearing these things, one of the things that I realized is, a lot of times the CPAs and the fractional CFOs and the bookkeepers, when they were using the word, oh, we're full service, it's almost like they use the word full service as if it was like a badge of honor. But when I did the research, I was like, business owners don't see the word full service as like a plus. Like, if you say that you're a full service bookkeeping firm, like, business owners didn't see that in a good light. Like, that wasn't actually something that they admired. I mean, in many cases, what it did is it caused them to say, I don't know if I want to do business with you. And what I started seeing over and over again is that more and more CPA firms were trying to solve their client acquisition problem by becoming a full service firm. And it just was not going well. And then there were some that I was seeing that they advertised themselves as a full service firm, and they were attracting clients, and then they were getting horrible reviews on the back end. And that's a whole nother issue of just, can you deliver on your promises? And what I was noticing is, a lot of the firms were unable to deliver on their promises. So now I definitely want to dive a little bit deeper into some of the feedback that they gave. So on the first one is, anytime you're dealing with anyone else's money where they are paying you for a service, they want to feel like they are a VIP. Now, this was the feedback that I was getting from business owners is, when you say that you are a full service firm, what they immediately started to feel like is, you don't really value me and my business, because they felt like you're just trying to do a little bit of everything because you're trying to maximize your business model. But from a business owner's perspective, it's, I am paying you to help support my business, I'm not giving you money to put food on your table. I'm not giving you money so you can just pay your employees or so that you can grow your firm, or so you can have the lifestyle you want. I am paying you because you are solving a critical problem for my business, and I'm actually utilizing your services to help me be able to focus on the important things in my business. So when a lot of firms were putting that on their marketing, or they're putting that in their branding of, hey, we're a full service firm, again, they were feeling like, oh man, I'm helping the client because I'm telling the client that, hey, we can offer all of these things. And what the client was perceiving about that is, yeah, you offer all those things, but I'm not necessarily sure if you're going to really be able to help add value to my business, because you're doing way too much. Now, when I initially shared this with I shared this point with some accountants of like, hey, when you're full service, clients don't feel like they're a VIP. They don't feel like you really value them. And when I shared this with some, man, it was interesting that some accountants really got upset, and they really got angry. And I was like, at the end of the day, what we have to realize is, are we in business to pay our own bills, or are we in business to actually add value and to serve our clients? Because if you're in business to stroke your own ego, or you're in business to pay your own bills, then chances are you're probably going to struggle with client acquisition. And so as I continued, I'm like, okay, Art, this is interesting. When potential clients see the word full services, or they hear you talk about your firm as full services, they immediately say, okay, all right, that means I am not going to be treated like I'm not going to be important to this person because they're doing a little bit of everything. Now, the next one that I saw was feedback that they gave is that when your firm is full services, what they envisioned, this was the picture that someone described to me. They said, it's like trying to go to the beach that is overcrowded. I mean, if you're listening to this, you can't see this, but what's on the screen now is there's a picture of a extremely crowded beach. I mean, to me personally, it would feel like a nightmare scenario of going to a beach that is this crowded. I mean, there are way too many people. Like, I remember when I've driven by places where I saw that there were too many people. I really wanted to go. I just turned around and I left. I mean, because it can just be overwhelming. And one of the things that an experience that my wife and I had, where my wife is half Nigerian, half Kenyan, and we were there in Nigeria visiting my father-in-law, and my wife really wanted to go to the market. And I don't think, if you've ever seen any pictures of a Nigerian market, if you look, you can Google it. It is in Lagos. It's called the Oshodi Market in Lagos. And we went, and my goodness, it was overwhelming. I mean, when you talk about crowds, and you just talk about congestion, and now there are people who love that atmosphere. There are people who really thrive in that place. But one of the things that I noticed is that a lot of people who are building a accounting firm, one of their mentalities that they had was, hey, if I offer everything, then I can get a ton of people to show up, and I can get a ton of customers to show up. And by saying that, hey, we offer everything, then we'll help solve our client acquisition problem. Well, that could be the case. But one of the things, when I talk to business owners, one of the perceptions that a business owner has is, if you offer full services, that means you are probably way too busy. Your situation is way too crowded for them. Like, you're doing too much to be able to really focus on them. I mean, it kind of goes back to the point about, being a VIP. It's, business owners, again, when their perception, now this is not, hey, Terrell's philosophy trying to share with you. I'm sharing what the business owners who are paying customers told me, is that when they are looking for someone to support them from an accounting and finance, bookkeeping perspective. One of the challenges that they have is when they hear someone say that they are a full service firm, the picture of just an overcrowded beach where you have no room to move around. There's, it's just congested and it's uncomfortable. I mean, and it's not so much that like, hey, it's a process where they're like, hey, this is, I want to be your only client. But what some of them were saying is that it just doesn't feel like you have enough clarity and you have enough space to really deliver value to me as a client. It seems like I'm just going to be another number in your list of clients because, again, you're trying to run your business or you're trying to make money, not really focus on helping me. And one of the things that I had to internalize is how a lot of bookkeepers and CFOs were thinking about the word full service. Again, they were thinking full service meant, hey, everybody is welcome to come in. We're here to help everybody. If you have an accounting related problem, we're here to help. Well, from the client's perspective, they saw a completely different image. What they saw is like a crowded, uncomfortable waiting room is the picture that they had in their mind, to where they were like, if you're full service, you're welcoming everybody. I don't want to show up. Now, there's some marketing philosophy behind that. Like if you've listened to a lot of different, people who specialize in marketing, like one is like Seth Godin or Chris Lockheed with Play Bigger, or people like Gary Vaynerchuk, where he talks about, a content approach and different things, where one of the things that I realized is the mindset that CPAs and CFO, fractional CFOs had for trying to market and solve their client acquisition problem was actually working against them. Now, one of the things that I did notice that was very interesting were the people who did offer that did advertise that they were full services or a full service firm, the people who actually started to get clients, one of the big challenges that they ran into is that they were perceived to be cheap and low quality. And nobody wants to run a firm where they are viewed as they are the cheap, low quality firm. I mean, if you ask any CPA, any fractional CFO, like, hey, if you had a choice, would you choose to be the cheap, low quality firm? I mean, nobody would naturally just pick that. And what a lot of firms weren't realizing is that that's exactly how they were being perceived, because they didn't understand how to look at their business from the eyes of the business owner. Like they really focused on looking at their business from their perspective, but they didn't look at it from how does the business owner perceive it. Now, two examples I'll give. And like I said, I don't have anything personal against these companies, but when we've done surveys and you look at surveys and you really grasp, hey, how do we take our feelings out of this next thing that I'm going to say? And we really just observe here, what's the feedback of some of the surveys and the questionnaires that have come in? When people had to compare two different stores, let's say when you had to compare a high-end, let's say a high-end store of, let's say Whole Foods. If you compare Whole Foods to a Walmart Supercenter, both of them have a lot of the same things. Well, let me say the Walmart Supercenter has a lot of the things that a Whole Foods has. But when you start to ask people as far as the perception of value, what you tend to find is that a lot of people place more value on Whole Foods than they do on Walmart's grocery section. Now, the thing is, Walmart has a very big grocery section. Walmart offers a ton of different options. They offer organic, they offer gluten-free, they offer, I guess you'd say, low calorie. They also offer junk food. They also offer food that isn't so healthy. And they also have a bakery. I mean, they have a deli. They have all these different things. They even offer a place where you can buy the equipment to, or the kitchenary to actually cook or prepare the food that you're buying. Like, they offer a ton of things. Like, they are really full service. Whereas when you go to a store like Whole Foods, it's a little narrower of a focus. I mean, there's a more narrow perspective about what you're gonna get if you go to a Whole Foods. Like, you're gonna get, the perception is healthier food options. You're gonna get fresher food options. You know, you got gluten-free, you got organic, you got low calorie. Now, yes, they also have a bakery. Now, the perception that people have is that their bakery is they're gonna have healthier baked good options. They also offer pizza, which, I mean, from depending on who you ask, pizza may not be the healthiest food option or the healthiest food item, but they offer pizza there. And the perception that people have, even in talking to people, is like, yeah, the pizza at Whole Foods they have healthy pizza options. Now, I don't know how accurate that is, because I've never actually like really studied the nutritional value of a pizza from Whole Foods. And I don't know whether that's true or not, but what I do know is the perception of the buyer has already settled on the idea of whatever I get from Whole Foods is going to be healthy. Now, I've even seen some people buy the same exact brand of cookies from Whole Foods that they could buy at Walmart. I've seen them buy the same exact item, but for some reason, when asked about it, they communicated that, yeah, these are healthier food options. Like, these are healthy cookies or healthier cookies. And I'm like, they're the exact same cookies that you would buy in Walmart. So what makes them healthier? And it is the perception. Again, no offense to people that are, like I said, people who love Walmart. I don't have anything against Walmart. What I'm bringing it up as is to really talk and address the perception, because the perception is what really, really matters. And so one of the things that we tend to think about a lot of times is when it comes down to a accounting firm is, again, if you're using the term full service, to you, it may mean that, hey, we're full service. So that means that, hey, we offer a lot of great things. But when it comes down to the mind of the consumer, oftentimes full service to them, what they communicated to me is that means you offer a low quality and cheaply priced goods. Again, if a person went to buy a product in Whole Foods versus Walmart, if Walmart charged the same price that Whole Foods charged, people would probably be upset. But if Whole Foods were to slightly increase their price, people would willingly pay it. And many people that I've seen can buy the same exact thing from Walmart that they do from Whole Foods, but they're willing to pay more at Whole Foods because of the perception of the value. And the same thing comes with if you're a accounting firm, a bookkeeping firm, a fractional CFO firm. Perception of value matters greatly. Now, the next thing is, now this one is similar to kind of the VIP and the overcrowded. It's just focus. Now, this was one of the areas that I saw a lot of CPA firms and fractional CFO firms struggling with, because what they were wanting to do is they wanted to build a bigger business and they wanted to be more profitable. Because one of the scenarios that I explain to people is, you know, when you leave a corporate career and you go into a firm full time, here's how my process went. Like, you know, you leave a corporate job, you come into your business and you're just trying to make ends meet. You're trying to make sure that you can, you know, pretty much trying to keep an income that you can survive. And so you're doing a bunch of different stuff. So you end up owning a job and you end up designing your firm in a way to where you just replace a job that you worked in the corporate world with a job that you work in your own business. But at some point, you're going to want to, or you may want to, grow your firm, take it to the next level. You may want to expand, you may want to scale. Now, to be able to effectively do that, there are some very interesting things that you do have to take into account. And in order to effectively do that, one of the things that I've seen, or let me say, this isn't the only way to scale, because maybe you can scale being full service. But from a lot of the business owners that I've talked to, and a lot of the CPAs and fractional CFOs that I've talked to, is the people who have been unable to scale are the ones who are taking a more full service approach. So the people who are able to effectively scale their business and go to the next level are the people who have a lot more focus in what they are doing and what they are aiming for. Meaning they know, hey, these are the things that we are focused on. These are the types of services that we are focused on. And what I noticed is they did not allow, hey, a client who has a request for this to make them say, oh, yeah, we can take that on. Or and it's one of those things that I get it. It is challenging. But when you look at a company that is focused, the perception that a potential client, a business owner who is on the outside looking in, when you have a area that you really focus on, for potential clients, what that meant for them is you must be really good, because you're saying no to all of these other options that don't fit into your focus. If you are focused on this, then you must be good at what you do. And what I saw was that, clients or potential clients were more willing to actually make referrals. They were more willing to tell other people about what you do because you had focus. Now, for firms that were still advertising, hey, we're full service, people are like, you look unfocused. Like, it looks like you're going to be blurry in how you're building your business. It looks like you're going to be blurry in how you help me. And what I also noticed in talking to a lot of CPAs and fractional CFO firms that were more full service in nature, when I would talk to them, a lot of times what we would find out is when I'd ask them, like, okay, all right, what types of businesses do you help? They didn't have a clear answer. They had this very blurry answer. Or I'd ask them, like, hey, what does an ideal client look like for you? Again, they would have a very blurry answer. Now, the challenge is, if you're running a business and you are trying to improve your client acquisition, and you had the chance, and I said, hey, I'll give you $1 million today to help you improve your client acquisition, where should I focus? And the problem is, when you don't have clarity and when you're trying to be a full service firm, you probably won't be able to answer that question wisely. And one of the things that a lot of business owners know is, like, hey, if they're a successful business, they've gone through that process themselves. They've gone through that process where they had to get focused. Now that they are having a growing business and they're having a business that is seeing some success, they're not going to be open or as open to working with an accountant who hasn't learned that lesson yet. Because what they know is, if I needed to be focused to grow my business, the accountant that I'm working with, they need to be focused if they're going to be effective. Because the business owners, I will say, for the most part, the types of business owners that a lot of CPA firms and fractional CFOs were trying to get in touch with were people who had some success in their business and people who had actually made some progress in what they were doing. And one of the things that I realized is, one of the major characteristics that made that business owner successful at what they did, it was to get focused. But when you are a CPA or a fractional CFO firm and you come to them and you're a full service firm, they didn't respect that as much. So one of the things that that some of the business owners said is, if you say that you're a full service, I would rather you be a focused service firm instead of a full service firm. Because if you're a focused service firm, you have a greater likelihood of actually gaining my business. Now, the last point that I wanted to bring to is this was something that I think it really hit. And this was something that a lot of accountants, when I shared this with some people, some accountants really had an issue with this. And the thing that I shared is part of the reason that some accountants are not all that great at their job, or not all that great at helping their clients, or not all that great at helping clients, and they were having a tremendous struggle when it comes down to client acquisition, is because their focus was on their focus was on, how do I solve the problem of my own fears? They had a fear that, hey, I'm not going to be able to pay my bills. I'm not going to be able to make my payroll, or hey, I'm not going to be able to live the lifestyle that I want. And so instead of offering value that protected the client's financial position, or that allowed the client to protect the client's financials and really provide the best service that would help provide coverage for the client's financials, what they did is they shifted their attention to cover their own fears and said, how do I protect myself from my own fears? Instead of, how do I do what's best to protect the client's money? And how do I do what's best to help protect the client's wealth? And when a lot of accounting firms that I was talking to, a CFO firm, were saying that, yeah, we're full service. Again, I went over to the business owners, and what the business owners said is, this is the image that business owners describe. When I hear an accountant say that they are full service, or I hear a CFO say that they are full service, to me, what that means, and like I said, this is what the business owners were telling me. They said what that means is this person is trying to protect or cover their own fears, and this person is not going to be in it for my best interest to help me protect and grow my wealth. And that one was a tough one to accept, and it was a tough challenge, but it's one of those things that as a business owner, even though you're in a technical skill from accounting and finance, as a business owner, one of the things that you really have to embrace and really understand is that the perception that the client has of the value you are going to deliver has a tremendous impact on whether or not they choose to do business with you. So, in summary, one of the things that I realize is using the word full service in your marketing material, on your website, or in conversation, it sounds like a good thing when you might be talking to other accountants. But when you are talking to business owners and you're talking to potential clients, if you tell them that you are full service, that does not typically turn out to be something that they like. That doesn't turn out to be something that they are interested in. That doesn't turn out to be something that actually piques their interest at all. I mean, it is something that really starts to turn them off. And after doing all that research, I mean, I had to do some soul searching for the TL Turner Group. And one of the things that I came back to is to our clients. Again, we offer bookkeeping and CFO services. So one of the things that I started coming back to my clients is, for the TL Turner Group, the primary bookkeeping markets that we operate in are, we support service-based businesses. If you are a law firm, a marketing agency, an insurance agency, we are great at helping your business. Again, if you're on the food and beverage, if you're a restaurant, a bakery, and a bar, then we are great at supporting your business, because the way we've structured our businesses, we have two different pods, and we have skill sets, and we have extensive skill sets in these core areas. And what we started telling people is, hey, truth of the matter is, the TL Turner Group is great at helping law firms, marketing agencies, and insurance agencies. And we are great at helping restaurants, bakeries, and bars. If you are any other type of business, we're good, but we're not great. So it's probably better if we help you do business with another accountant or find another bookkeeper, because those aren't the things that we're great at. Now, when I started telling accountants that and other bookkeepers, one of the things that they started challenging, you're limiting how you can grow your business, because accounting and finance is just agnostic. I mean, you can do, believe that, that's fair. But one of the things as a business owner, what we have to think about is from the perspective of the client. How does the client or the potential client, how do they perceive this? Now, if I am focused, then the client perceives more value. And then also, I took a step back and I said, okay, maybe they have a point. Maybe I should do the math and say, okay, all right, if I want to, if I really want to grow my firm, like, does this really limit me? And when I went back and I did the math and I said, hey, if I charge, let's say if you charge X amount per month for my services, like, how many clients would I need to have a $1 million firm? How many clients would I need to break that $1 million firm, that $1 million mark? And when I did the math, one of the things that I realized is based on, and I took a conservative approach to the rates that we charge our clients, which in some of the clients we charge much more, but I took a conservative approach and said, if I took a conservative price, how many clients would I need? And the math came out to 111 clients. And I said, wow, I really don't need that many clients to have a $1 million firm with very, very attractive profit margins. And when I looked at that and said, okay, all right, if I only need 100 clients, if I look at the areas that we have narrowed our focus down to with law firms, marketing agencies, insurance agencies, restaurants, bakeries, and bars, how many businesses are in those segments? And is it enough for me to get 100 clients? And when I looked at the numbers, I did some. When you add up all of the law firms, marketing agencies, and insurance agencies, there are 485,000 in the US. When you look at restaurants, bakeries, and bars, there are 880,000 restaurants, bakeries, and bars. If I want to have a of those, what I realize is narrowing my focus down to, hey, we are not full service. We offer our bookkeeping and CFO services, and these are the types of businesses we offer it for. When we started to get that clarity, tremendous growth and things started happening to where we are definitely on track to hitting that $1 million firm in less than 3 years, because we started to narrow down the focus. And after doing the research and realizing that as an accountant, I may value the idea of being a full service firm, but when I really look at it from the business owner's perspective, they don't value the term full service like an accountant does. Thanks for tuning in.
Thank you for tuning in to another episode of the Finance and Accounting Show. If you like what you heard, don't be selfish. Make sure you hit that subscribe button and then share this with a friend, because you know a business owner that could definitely use this insight. So be sure to hit that subscribe button, share it with a friend, and turn on the notification bell so you get all the updates when we release a new episode.